Hello and welcome to Business Today. I am Siddharth Zarabi and with me today Mr. R. Gopalan, former Secretary of the Department of Economic Affairs in the Union Finance Ministry, someone who's had a long span in government managing India's economy and also has been working very closely with corporate India after that phase of his career. Mr. Gopalan, welcome to Business Today. Thank you very much for your time with us today. The big headline really is the rupee breaching 80, and that's a seminal moment in some ways. People are saying that India turns 75 as a republic and the rupee has hit 80. Your initial comments on this before we move on to the how and why.
I believe, Siddharth, thanks calling me. I believe that this depreciation was something which had roots elsewhere, not partly in the country's, following of economic policies, but mostly on what was happening outside the country. Basically, there was a shortage of dollars in the last 2 months in the international market. And India, it is easy, the high liquidity is there of dollars in India, but it is easy for people to take dollars out of this country. And you had other issues relating to the interest rates getting raised in US and those other issues which came about. And people started looking at how they can have higher arbitrage and higher safety for the financial assets they have got. And that has led to this kind of a flow outside the country of dollars. And this is something which is influenced much more by international events, to some extent by our own action, but mostly due to international situation.
Mr. Gopalan, I'll try and do a rapid fire round with you of questions which are there in the Aam Aadmi's mind really with regard to the rupee. The first question, Mr. Gopalan, is it a bad thing for our currency to depreciate?
Depreciation has its advantages and disadvantages. Advantages is that our exports becomes, very favorable. It becomes competitive. As far as imports are concerned, they become very costly. They can put up inflation as a result. And depends on how we are able to use fiscal and monetary measures to handle this. This can have a very difficult effect as far as the economy is concerned.
At the end of last year, $1 was equivalent to 74.5 rupees, and by now the 7th month, and we still have 10 days or more for this month to end, we have now touched 80. Is this sharp depreciation on account of only external factors?
To a great extent, it is on account of external factors. As I mentioned to you, the interest rates getting raised in as a result of inflation hitting the advanced economies. That, people understood that interest rates have to be raised, which means that the money has to flow outside for people to make arbitrage opportunities. Second, obviously, the Ukraine war was something which really made people think that we should go to safe asset investment at this point in time, because they did not know what would be the effect of this Ukraine war on various other economies, especially developing economies. And therefore, people thought that it is better that we are able to take our assets to safer places. And dollar at this point being the international reserve money is a better place for people to invest.
One of the other points that is there in the debate is the political opposition blaming the government of the day for so-called mismanagement of the rupee. The question I have for you, could the government have done anything else with regard to managing the depreciation of the Indian rupee?
If you ask, in hindsight, everybody becomes very wise, Siddharth. And if you look at it as if inflation had been, contained in a manner which is much more helpful. For instance, we are having 3 months of 7.1 and 7.03, if we had ensured that the inflation did not rise so much, and if we had used interest rate as a policy instrument to ensure that inflation had not, gone up so steeply, maybe that would be a comment one can really make. But once again, we think that, these are all in hindsight, everybody is wise. But comments are that if interest rate regime has managed the inflation uptick, even before the Ukraine war took place, even before that the commodity prices were rising, and there were pass-through effect of those in the Indian economy, those would really push up, this did push up inflation. But inflation, the levels were high, but then rate of growth would have come down as a result of the fact that prices started stabilizing in the international market. And therefore, I would think that at this high level of inflation, probably before inflation getting entrenched and unhinged, it's better that we would have acted with little bit more alacrity. But once again, this could be a matter of 3 to 4 months and not more than that.
You say that it could be a matter of a few months. My next question is, the currency is really managed by the Reserve Bank of India, and the stated objective is to manage unusual volatility in the currency. The RBI does not have a target for the rupee when it comes to its exchange rate. My question is, how would you describe the actions taken by the RBI as far as currency management is concerned? Was something wanting, or is this what the RBI could really have done?
One should look at what is the current situation. Is it really bad? And then you should ask these questions. Today, my view is that it's not as bad as it was in 2013 when the taper tantrum took place. The economy is really stable. Growth prospects are very, very good at this point. Probably the highest growing developing country in the world, expected to grow. We have good reserves availability is there. So with all these basic strengths in the economy, the steps taken by the RBI at this point in time, along with steps taken by the government, I think are probably the best. It's not an overreaction. It is, in my view, a reaction which is commensurate with the kind of strengths and signals which we are receiving from various parts of the economy and including international scenario.
So, Mr. Gopalan, the current phase of depreciation in the rupee is not on account of something being wrong fundamentally with India's economy, our macroeconomic policies. And I am reminded of what happened between 2004 and 10 when the rupee moved from 45 to nearly 60, and now it has moved from 60 to 80 since 2014 really. Do you agree with this view that people in the government are saying that this is not the rupee's depreciation, it is actually the dollar's strengthening and nothing is wrong with the Indian economy as far as the currency movement is concerned?
Some amount of depreciation is bound to happen because of the inflation differential between the rupee and the dollar. So that should normally take place. Now, my view is that, barring that, anything which is found to be in excess is something not to do with what our economy has or our steps have been. It is more due to how the dollar has changed over a period of time, or the expectations on the dollar, expectations of the economy, expectations of inflation in US and other countries, the expectation of recession and those kind of things which are now being talked about. These have actually accentuated the slide even further.
Mr. Gopalan, on this point, before I ask you a couple of final questions, are you really telling us that no one really failed? It was something that was outside the hands of the government and the macroeconomic authority as well as the currency authority, which is the RBI, and it is what it is, and this was bound to happen?
As I mentioned, Siddharth, that there were issues relating to how soon you could have increased the interest rates to contain inflation. The core inflation was sticky for quite some time, and the headline inflation was going up, but there was once again a big gap between the WPI and CPI, which was also a matter of worry. So, if we had raised interest rates a little earlier, maybe 3, 4, 5 months before, when the commodity prices were high, tending to be high international markets before the Ukraine war, hit us, probably we could have, not seen this kind of a higher depreciation as we are seeing now. But once again, this is a matter which is counterfactual, and therefore anybody can be wise in a counterfactual situation. So I would still think that this has been handled, barring this particular one I mentioned. The entire episode, I believe, has been handled very well.
Mr. Gopalan, since we are now looking towards the future and taking off from your answer, two questions. The first one, what should happen to our interest rates? Do you see there being a case for further tightening, or should we let the impact of the recent round play out first and continue to support growth, which is uneven and patchy in some places?
My view here is that we should not panic to raise interest rates to ensure that exchange rate is going to be, made really reasonable. No, our interest rates have to go up certain, maybe another about 100 basis points or 120 basis points maybe, but that is over a period of time. We should not be in a hurry to see that we should achieve the real rate positive in the quickest possible time. It is not correct, because that will have impact on the growth, which is still growing. The private investment is coming in. Private capex has been increasing incidentally. And it will have an effect or help on inflation management. So my belief is that we should not be going in for cheap increase in interest rates. Some amount of policy rate going up, repo rate going up is on the card. It should happen. In my view, over a period of time, it may be another about 100 basis points or thereabout. But beyond that, it will be really counterproductive as far as this phase of economy, when growth is one of another issues which we have got to tackle. So my belief is that this is something which will happen in due course of time. And until that happens, I think the range bound way the rupee behaves is likely to be around this number.
Okay, so you are saying that what we should really be prepared from an Aam Aadmi perspective is for the rupee to be in and around 80 and not let that really worry us.
I think so. It is between 79 to 81. Some people say 82, but that is maybe for a short period of time. But we should look at a range of 79, 81 for the rupee dollar parity in some months to come. I'm betting my hedge. I'm hedging my bet for another about 6 to 8, 9 months, and I hope there will be some stability in the international economy then, and there is a possibility then that this number, this range will hold for some time to come.
All right, Mr. Gopalan, I think that's a perfect way to summarize what's happening to the rupee, and also for you, the viewer, to note that when it comes to a currency and its movement, there are multiple factors at play, and perhaps looking at it from a perspective of linking it to national strength in some ways may not be the best way to look at what is happening. Unusual times for the global economy, and the headwinds of inflation and what has been happening on account of the Russia-Ukraine war have upended most macroeconomic plans, and perhaps, as Mr. Gopalan said very clearly, reading between the lines, we will have to wait for 3 to 6 months for clarity and certainty to emerge. Mr. Gopalan, thank you very much for your time with us today. With that, it's a wrap. If you've been, thank you very much for watching.
If you like the video, do like, comment, share and subscribe.